So, big day today, big moves. See, as the week builds up, I think I was talking about that earlier in the week, um, we see that we tend to see the bigger moves. And we've got a thesis that we can build upon. Just about to share my screen if I can do that. So, big moves. Essentially, the news will put it down to it being a risk off day. Um, let's look at the equities first. So, the NASDAQ for me was the one. So, um, talked about this before, talking about building up on the session. So if we put bear with me. Um, so this is my weekly template. It's in the educational um, section in the Discord. Now, for me, I want to be off the screens. I want to trade the open. And this stuff that occurred late on in the day, that's fantastic for those that are holding on. I didn't partake in this, but well done to anyone that held on to Wall Street's open bearishness. Right now, the thesis was that we've come up three sessions in a row. Right, so we started off in New York, high up, coming up, building on the momentum of the day, and then we got the sell-off into those longs. So as we were talking about yesterday, I believe, and I asked you all, who is in the money? I think we were talking about euro dollar. It didn't pay off that time, but it certainly did today. So who is in the money today? Asia, London. So the sell-off into those longs was the bias for the day. Um, and on a 1 minute chart, which I use, I like to use the hourly to get a gauge of what the market is doing in terms of flow, and then I start moving down onto the lower time frames, looking for the market structure and my optimal entry point if I'm going to say short the market, which is I lean to shorting rather than trend trades, but counter trending is what I like to do. Um, or if I'm swing trading, I prefer to go with the trend. But day trading, so this was the cue really, the break of structure, and on a 1 minute chart, sorry, 5 minute, I believe the structure was. And I get a little helping hand with my EMA crossover to really signify that yes, this is a bearish environment. So I put my EMA up. So we're in a bearish environment, and I just want things to all add up. So we've got a confluence of a triple top, the break of structure on the 1 minute. I mean, we actually got the break of structure. No, yeah, it was the 1 minute. Sorry, yeah, and um, and the sell-off. Now, I prefer to get into market. I am always in anticipation of a pullback, so that was the setup for me. So we got the sell-off, pullback, triggered in, stop in an area where I feel that well, my thesis is wrong if I get stopped out, and that was a lovely 5-1 target um, to the what you call it, low of the day, and it continued. But so be it. I'm done and dusted. So the rationale behind stocks tailing off, um, well, we've got the China's economic outlook is essentially weighing on sentiment. And as always, the market is, you know, flipping, turning on a dime with regards to sentiment around the Fed. So all of a sudden, um, there are risks to the Fed funds rate creeping back in to market sentiment, despite um, what being priced in otherwise for a pause next month, and some presuming that the Fed are going to be on hold and that they're at the end of their interest rate cycle. But now we're getting sentiment emerge the other way. So that was a perfect storm for dollar yen, which is tailing off, um, with risk sentiment souring, and yields consequently coming off. So we've got that drop here in dollar yen late in the day, a continuation of the move. So this is what we were looking for: the pump and the dump. Now, whether that's going to continue, we don't know, but it's certainly breaking down structure, and this bullish cycle is certainly decelerating. So perhaps we're going to get. Let's have a look where we are in terms of close. So yeah, we're going to get a first green day. So we came up high, excellent. Broke yesterday's close, fantastic. We've come up again, even better, right? And we've moved right away from trapped longs, right? And what this does is this encourages those that were holding on to their longs. They're desperate to get out because they've seen that market pull away from them. So their positions at that point were coming under pressure. And sorry, I lost my train of thoughts. My phone rang. So when they're seeing this move run away from them, they're underwater and desperate to get out of their position. So when they see that come back, they just want to get out, break even, or as close to their entry price as possible, and that is generating the next move lower, right? Because they're sell stops, and then we're going to get fresh money coming in, selling this, presuming that the market's going to continue lower, and that can accentuate this move, which was what we've seen late in the day. Um, so this will close as a first green day in a series of many up days, and that gives us the thesis for tomorrow being a trigger day to look for shorts to close the week into these longs. And in that respect, we've got yesterday's high, low, that white line tracer is yesterday's low, so is that green dotted line. This is my weekly template. Just it helps me speed things up when I'm analyzing the charts. And no, these are not lagging indicators. These are, this is information real time to work from. So, and then we've got last week's lows, last month's lows, as well as a downside target. So this will be much to the joy of the Bank of Japan, and those concerns about intervention may start to dwindle somewhat, but we're still up high. Gold was another one which was fantastic setup, exactly what we want to see. 3 sessions of rise and the blow off. So up high, down on the 5-minute chart, monitoring structure, monitoring for a break of structure, then down onto the 1-minute chart to get the confirmation, to try and get an optimal entry, day trading the Wall Street Open, and there it is, move lower. Gold, please, chance of going down more. Okay, let me look at that for you. So let's come to a cleaner chart. In fact, let's just clean this one up that we're on, and we'll move out. So on the daily chart, sorry, my machine tends to slow down using this recording software that I've got. Ah, dear, dear. Right, where are we? So, could this be the fake out? Could this be the day where we close higher? We've still got some way until 8 o'clock New York, I believe. Gold will close officially on this contract. And yeah, so 6 o'clock my time, 8 o'clock New York. So if this comes up and closes, this red line is yesterday's closing price at close 189209. So I'll tag that like so. So if we get up and close below, no, that's not it. Hold on. Close back above, that's the low. What was the close? Yeah, I can't seem to get it. Anyway, well, round about there. So if we get up above this closing level, that will make for a first green day, same as what we were looking at, dollar yen, the same as dollar yen. If we close higher, then that's the first bullish close in a series of bearish closes. I've got an indicator for that as well. I'm all tooled up. Daily close markers, right? So we've got 1, 2, 3 days of lower closes. And if today, or is that more? No, 3. If today closes green, that would be bullish for tomorrow, and would be looking for long setups if they present themselves. We could also be looking for shorts, but beware, potentially holding on to those shorts might not be wise if we're in an environment that was starting to turn. Right, so you may get shorting opportunities and setups, but they may be scalps. Whereas um, a bullish setup could well be a trade that will last longer. You can hold it. You can, however you want to manage it. I mean, I always want to get paid for my analysis, so I'm looking to come out of the trade as soon as it starts going in my direction. I'll calculate whereabouts on the chart according to market structure. Usually areas of first resistance on the day, and then if the market continues in my direction, that's confirming my thesis, and I can get in again, add to the position, and then at some point I'll be taking it off and then leaving some on a situation like this where I feel, well, we could go up to last week's lows. That's through. That's into what, Tuesday's highs. So, and that could run even further. So what I like to do also is look at the longer term chart. So looking at the daily chart, measure with a Fibonacci tool, measure that range and look for where we have confluences with the Fibonacci and levels. So the first area of interest would be that 50% mean reversion. That meets last month's low, which is that red dotted line. That could prove to be an area of resistance. So I'd be cautious around that level. And then up towards the 78.6 that aligns with that uh, opposing candle. So there's going to be volumes in here, and it meets last week's lows as well, or thereabouts. So that might be an area where I'll be seriously considering taking the majority of the trade off, and then leaving some on. You never know what's going to happen. But at this point, we will be on the backside of that bearish trend. So Monday, Tuesday, Wednesday, perhaps a continuation up to last week's highs. The origin of that sell-off higher up as a potential supply area for where we want to target. And then you come further out and you can measure the same scenario with the Fibonacci on the weekly impulse. And there we see a move up into that area of supply, tallies up with the 50% mean reversion of that bearish impulse and the 61.8. So nice target areas for the bulls. And that might take us, a series of days to complete, maybe even a few weeks, or maybe just a couple of weeks, or maybe just 1 week. But that is the target area. On the flip side, can this continue? I was asked. Any chance of going down more? Yes, absolutely. If we don't close above yesterday's closing price, then we remain with a bearish bias, because we're still on the front side of the bearish trend. So just because we've got one, two, three, and what will be 4 days of bearish closes, that doesn't mean that we buy. We need to see the market decelerate. So there's a number of stages we need to see until we can find conviction in a bullish thesis. So one would be for a close above yesterday's close, be a first green day in a series of red days. You might even want to wait it out and wait until Monday and see that this trend line breaks. It might be Monday, Tuesday that we get that move up. So maybe we'll break the trend line tomorrow, Friday, and maybe you want to hold off. So we'll look at it. Let's see how Asia and London sets up. So first of all, we need to see how this closes and see how London and Asia sets up, and we'll look at it in the morning before the Wall Street open, and during the New York currencies open, and the crossover between London and New York, and we'll get a good gauge there. We'll have some history to go on, some market flow and structure to make our case one way or the other. Okay. Any other pairs you want me to look at, guys? Just having a quick look at this dollar and see how we're getting on. Very messy chart. Let's clear it all up. So we're still front side of the bullish trend in the dollar, but it's encouraging to see this start to decelerate, pulling back into yesterday's demand area. We've had an attempt at that. Our first attempt, we've got an attempt here coming back up, but failing so far. Are we going to get a close below yesterday's closing price? Looks like we will. Close below 103.50 will be encouraging. Euro is the opposite blood wish of the Dixie. So to give you an example of that, if we flip this on its head, and if we look at the Euro chart, spot the difference. Very similar, right? So you can use the Dixie as a gauge for your outlook on the euro. The Dixie is about 45% weighted in the basket of currencies to the dollar in that index. So maybe that's a helpful tip. But looking at the euro overall, euro, are we going to close above yesterday's closing price? Let me have a look. Looks like we're going to. Or maybe not. Sorry. Okay. Let's see what happens over the next hour. 38 minutes to go. You're welcome. So, in this respect, looking at structure, let's look at the structure on the 15-minute chart. So we're looking for the, yeah, it's still quite some way off. Looking for the lower high, which is here before the lower low. So we're way off there. So we're still on the front side of this trend. So bearish. So until we get a break of 108.89, or let's see if we can drill this down. No, we can't. So we need a break of 108.89, and then we can start to build, well, or a close above yesterday's closing price. So this area is going to be important. If we can get above that area, we're looking good for Friday for looking for longs. All right. Otherwise, last month's low is down here as a target. Go out to the weekly chart. On the weekly chart, there's momentum in this week so far. We know that with the lower closes throughout this week, but it's nice to see the weekly chart as well and see that momentum. Perhaps we're coming in for a retest of those double bottom, triple bottom lows that guard a void towards 107.92. Okay, so come down to the daily chart to look at that a bit closer. So there's nothing really in the way on a break of those lows to take us into this resumed support area. All right, but are we going to see the correction up? On this daily chart, we've got this M formation, which is a reversion pattern. So if I draw that in, and these tend to be a pull on the market back towards the neckline for a retest, and that neckline coincides with last week's lows. And if we measure the Fibonacci on this, it is also the 38.2 retracement level. So that's an attractive area for us to target if we start to see a turn in this deceleration and a turn in this bearish cycle. Okay. Any other questions, guys? Oil? Yep, I can look at oil. So let's start out from the weekly chart, work our way in. In fact, let's go to the monthly just for a second. I want to check something here. Okay, so we've got resistance. In monthly resistance. Just keep note of that. Try and keep the charts as clean as possible. So we're at monthly resistance. We're at weekly resistance. We've got this harmonic shape chart. So this is bearish, also referred to as a W. We've got a W within a W. Overextended, but nonetheless could be a pull on the market into the neckline of the larger creation, the larger W creation. The trend line is coming under pressure. However you want to draw that. We've got prospects of a correction on the Fibonacci scale into this neckline area towards a 61.8 or thereabouts. So 74.90 is the downside swing target on the weekly chart. Right, and then we can start zooming in on this trend. And look to see if we've broken structure. I'd argue that we have, which is this candle. So it came up, made a higher low, rose, made a higher high, and then we came crashing down to break that structural point, last week's lows, potentially now acting as resistance. Therefore, this is a broken down market, bearish bias. It's not to say that we can't come back up before rolling over again. And in that respect, we can measure the bearish impulse and look to see if this correction come up into a 61.8 that aligns with these last month's highs. July the 31st, the high was printed. So it marries up with a 61.8. So there's a confluence towards 81.94 if this market is going to correct or continue correcting, because it's already correcting. So if it's going to correct even higher, then that could be a feasible target for those counter-trending this bearish move. So how feasible is the correction? We can then, well, let's mark that off as a target area. Okay. And we'll clean up the chart yet again. And we'll start working from the bottom up and looking to see whether we're going to come up or whether we might come up, building our bullish thesis for the meantime. And we can start to look at structure in this bearish trend. First thing to note is we've got this W down low. Could be coming back in to retest the neckline, quite possibly. Have we broken the last lower high? No, we haven't. It's all the way up here. Are we still on the front side of the bearish trend line? Yes, we are. So, do you think it's time to be buying oil, or should we wait for development? Because this could quite easily continue lower, could it not? It's in a bearish environment. So until we start seeing structure such as 81.39 broken, now we can narrow that down to a 1 hour chart, and perhaps we're going to see structure being broken on the 1 hour chart. No, not really. I mean, you'd argue that this here, I mean, this might act as support in here. Well, it currently is, isn't it? So, support, this candle here, right? That's what I'm referring to. This opposing candle in that bear trend, they tend to act as a support or resistance level. It's because transactions are taking place in here, an area where prices were agreed, so they'll likely be agreed there again. That's the thesis. So in that respect, what am I doing here? In that respect, they can be regarded as an area of demand, support, and it aligns with the 79.97 structure point as well that was broken, right? So if we are looking for a bullish scenario, then we'll want to see this support hold, the price move up into this neckline on this M formation, break that high volume area as the volume profile shows us. This is the point of control, that orange line. Get above that, breaking trend line resistance and taking on our 81.39 structure point, probably coming back in more than likely. Most breakouts fail, and then looking to continue up. Now, ideally, what we prefer to see is a lower, so a move up and a lower entry point. Because if we're targeting in here, then being up high is not desirable. So we want to see a break of this structure, all of this, these highs, and a nice dip back in, and that's where we can start looking for our entries to come up. And looking for where the stops are likely to be, which are up here. Because this was the very firm move lower, so anyone shorting from up here, here, they're likely moving their stops down. So if we do get a break here, we can see a fast move up to squeeze. Traders are in the money still with the stops up here. 78.6 retracement would achieve that, 83.50 on the upside. Gold didn't close on the price you mentioned. Gold is still running. It hasn't closed yet for the day. We've still got time. No, I haven't looked at the silver bullet strategy yet. I wanted to do a back test on that, um, and I will do it. And you want me to run through the strategy? There's a video on it in the education section. Blah, 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 blah. Let me put the link in for you. 1 minute. Bear with me. Well, I've lost the chat now. Where is that? Here. Is that it? There we go. Right, back in. Okay. Let me put that link in here. No problem. And what I'm going to encourage you guys to do is your own back testing. And what we should do, we should all butt heads and assign each other homework for the weekend. You know, we could share. I could say, well, look, I'm going to back test the S&P with it. If you could do it on the euro, someone else take the yen, um, etc. Teamwork. And I'd also encourage, not encourage, I would, I'm going to word that carefully, don't want to get blamed. I'm using FX Replay, FX Replay. Can't remember how much it is. It's quite expensive. It's only about 30, 40 bucks, I think it is. Pricing. Oh no, it's less than that. No, it is. It's 35 bucks a month. But it's a nice tool. It uses trading view charting, and you've got many of the same indicators and so on and functionality. But what it gives you is it records your trades that you take and gives you statistics. So it's a very nice way of determining whether you want to continue using a strategy in the live market or forward test it on a demo market. That would be my suggestion. If you've got something that's worked over history, then there's a high probability that it's going to work in the future as well. Markets change and conditions, chop and change, so you can't rely on results from the back tests as you might be in a completely different market environment. You might be in a market that's less volatile, that's consolidating, that's more volatile. So that's going to, obviously change the performance of any given strategy that you've back tested. But it's a nice foundation to work from, and it will certainly give you confidence forward testing it. Back testing is a very good way of practicing your trading um, getting an eye for the price action, the rules of the strategy, so that it becomes sort of robotic. And you want a strategy that's mechanical, so a rule-based mechanical strategy, um, for many, many reasons, not just for psychological, um, and reserving your psychological capital, if you like, right? So having a rule-based system will keep you out of taking bad trades and being pulled into the market through your emotions and because also it's quite enjoyable when you click that mouse and you put on that trade and your emotions go up, your adrenaline starts firing up. So to keep you out of all of that, basically leads to turmoil. Um, a mechanical strategy, and if you can test it on something like this, and get tuned into your strategy, so that when you take it to live markets, it's like second nature. So yeah, there you go. Okay, great. Test it on the NAS 100. That would be great. Let us know how you get on. Okay, and Lovewish is going to take the euro. Fantastic. And if you want to put in the suggestions box, guys, on Discord, that we should make a backtesting group and have a section for backtesting within the Discord, then I think that'd be fabulous. And we can start sharing the results of these various strategies that we're testing out. Okay, so there we are. Any other questions, guys? In that respect, then, I think we'll call it a day and let's see what comes of tomorrow and the setups that are turning up. And tomorrow's video, I will home in on what's looking hot for the day ahead. I'll try and get through the board uh, with you guys and see what we can find out in this crazy world of markets tomorrow. See what opportunities are setting up, okay? So thank you very much for attending yet again. I really enjoy these sessions and the interaction. Scalper's just joined. How you doing, Scalper? How was your day today? I'm about to wrap up the session. There will be a recording of this, but if you've got any questions for me, I quite happily hang on and take a question from you if you want me to look at any market. Other than that, we'll be calling it a day and I'll wrap it up and I'll post the video. It'll be in the Discord for the next sort of 10 minutes. So closing this down, 5, 4, 3, 2, 1. Thanks, guys. See you tomorrow.